Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right, we are back with another episode of the Real Estate Investing Club. Today we have Bronson Hill with us from Bronson Equity. I mean, if you can name it, Bronson has done it. They do multifamily as the main, and then they also do ATM machines, oil and gas, debt funds, and senior housing development. So there is a lot to go into here on the real estate side. I mean, it's multifamily. We always love to talk about multifamily because it's one of everybody's favorite assets. Man, it's too early and I haven't had enough coffee. So either way, Bronson, I'm super excited to jump into this. Thank you very much for hopping on the show.
Hey, Gabe, really excited to be here, man. I love your Space Needle in the background there. So talking about my Seattle roots, I still feel like I'm a big, Seahawks fan and love Seattle. So love we can talk real estate and talk, we got a lot to talk about, I'm sure. So.
Yeah, and actually, I don't often have PNW guys on here, so I'm super excited to have
Love
you
it.
here.
Yes.
I told you before we get on here, we like to start with stories, and I'm sure you got a good one. So why don't you take us back to the beginning of your story? How'd you get started in real estate?
Yeah. So it all began with a young boy and a dream. No, I'm just kidding. I won't go back that far, but no, I've done a number of things I feel like I think I'm on my third career now, but I started out as a youth pastor, always wanted to do real estate, but ended up in medical sales, medical device sales for 10 years. And it was a great job to have. Medical sales, I was working, I got it to where I was working 30 hours or less a week, was making over $200K a year. But the thing I didn't have is I didn't have control over my time. And really, I call it the golden handcuffs, right? That we're stuck in a place that we get paid, just enough or paid too well to to be able to leave. But when it comes to financial freedom, well, everybody uses that term, but really, I think what it means to me and to a lot of people is time freedom. And so I realized a lot of these physicians I worked with, they had financial freedom. I mean, they were making some $2-3 million a year. I had a couple I worked with, but I realized when you're working 60 or 80 hours a week, that's not true freedom. That's not time freedom. So I just over time realized I wanted to do something in real estate, started doing single family, realized I wasn't going to get there fast enough. I had a mentor approach or, kind of talk to me and say, hey, why don't you consider multifamily? I said, well, I'd love to, but I don't have the money. And he said, well, you can raise the money. So he talked about this thing called real estate syndication and still learn about raising money. Fast forward now, it's been 5 years, I think, since, for the, we did single family before that, but for the multifamily and other stuff, we've raised over $40 million. I wrote this book behind me called Fire Yourself, how to replace your working income with passive income in 3 years or less. Was able to do my great corporate job about 2.5 years ago. Haven't had regret of doing that. And I just love life. I traveled 6 times internationally last year, get to help a lot of investors create passive cash flow without taking up more of their time. Because there's a lot of people that think that owning a rental house or 2 or 5 or having a stock trading strategy, these are passive, but they're not. And so passive investing involves vetting a deal and vetting a team and then sitting back and receiving the mailbox money.
Yep. There you go. It's funny you mentioned golden handcuffs because I feel like that's so true. And it brings up a memory I have back when I used to do jiu-jitsu. There was a guy in my gym who probably in his late 40s. And I just remember he was in software sales and we went for a beer after, one of our training sessions. And he was telling me, I can't remember how the conversation came up, but he told me how much he made. It was like 400,000 something, a lot of money. But he used that phrase. He said, but it's golden handcuffs. I work too much. I don't enjoy it. And that conversation stuck with me because I was like, this guy's making more money than I would at the amount of money that I feel like I could just be super happy on. And yet he's not happy. And this was before I got into real estate. And then I kind of got going down that path of, passive income, mailbox money that comes to you every month. So golden handcuffs, that rings really true to me. And it brought up that thought or that memory of mine. So, I mean, you did it pretty quickly. You said 2018 is when you bought your first one.
Yeah, 2018, we bought first large multifamily. I had started a meetup. So again, after this meeting with this mentor, I started a meetup and I wrote these books that said start a meetup. So I went to somebody who ran a meetup and I said, hey, what if we did one that was only focused on larger deals and multifamily? And she's like, that's a great idea. Sure. And I said, I'll do all the work. You just show up. She said, oh, that sounds even better. So then I met my first investor at that meetup, which we had 60 people at. And just simply, again, there's a difference between being an expert in something and being a leader, right? A leader is in the front of the room. An expert knows the stuff super well. I didn't know the stuff super well, but because I was in the front of the room, a guy comes up to me and is like, "Hey, I'd invest in one of your deals," and I was like, "Are you talking to me? Like, what the heck?" And so he decided to invest 100K. I found a guy in that same meetup who had a deal, was looking for money, and connected the two of them. So that's kind of how I got my start. And then through some different partnerships, I can get into that, but it basically allowed me to scale up pretty quickly.
Nice, man. So that's interesting. Your mentor suggested that you start a meetup.
The mentor didn't necessarily suggest that. I just read a bunch of books, and a lot of these books and people I listened to, they were saying, "Oh, start a meetup, start a meetup." And it was a great way. I think a couple things. One is it got me to the front of the room. The hardest part, I think, of doing larger deals where you have investors, a lot of people think like, "Man, how in the world?" I look back now, I'm like, how can I've raised $40 million? That's crazy. Like, how is that even possible? But it just starts with like doing stuff, like taking actions. And when you're in a place where you're creating value for others, particularly you're at the front of a room and you're teaching, it helps you to be presented as a leader, but it also helps you to learn much faster because you're the one up there asking the questions. You get to kind of like really learn how to interact with these experts. And so, just like when you have a podcast like you do and I do, like it's the ability to sit with people that wouldn't normally necessarily just have a conversation with you, but you can ask them whatever you want, right? It's really a cool opportunity. So anybody who wants to grow, I think both a podcast or running a meetup are great ways to help you grow and help spotlight yourself as a leader.
Yeah, absolutely. Do you feel that the meetup, well, was that where most of your initial capital raising, did that happen through that meetup?
Well, it's kind of a funny story. I think anybody I know that raises capital always has something like this of like, they tried a bunch of things, nothing worked. And then they just they kept trying different things. And Tony Robbins, which I'm a big personal development guy, he talks about make your end goal and then continually change your approach while keeping the same end goal. So you just keep having to change your, but you keep the end goal in mind. What am I doing? Whatever. And you keep trying different things. You're like, oh, this didn't work, or this worked a little bit, or I'll try this, whatever. You keep trying, and then finally you find what works. Oh, this actually works, or this works a little bit, or I can change this. So I had, and I kept the number, but I had 62 calls or in-person meetings with friends and family that a lot of them I was sure they were going to invest, but they didn't because they know me as medical sales Bronson at the time. They didn't know me as real estate Bronson. And that's a challenge for people that are starting out is they don't know you as a real estate person typically. Now, if somebody's been flipping for 10 years, okay, obviously this person, this is what they do. But a lot of people don't know that story of a lot of people. So for me, that was the case. And so I had, that first investor, again, because I was in the front of the room, it wasn't, all these people that I knew, but again, going from 0 to 1 of raising money, it's the hardest thing to do is getting your first deal done. And so that's kind of, I think, one thing is doing a meetup. Another kind of sneaky way to do it is if you have a little bit of capital to invest, where if somebody's got 50 to 100K, let's say I'm somebody who wants to raise capital, I could go to somebody who's kind of a mid-size or smaller operator and say, hey, I think I can bring 500K, I can raise some money for your deal. I'm also going to invest, whatever. So then what you do is you put your 50 or 100K in and you send a note to your friend, saying, hey, John, I'm investing in this. I thought you might be interested in this as well. Right. So it's kind of a sneaky way that you're saying like almost like a friend referral rather than but it's a way that if you have that agreement with the operator, hey, I'm a part of this, I'm going to invest and then bring people to it. It's kind of a way to get started. But that's the hardest part of raising capital is the first deal, getting the first amount just a little bit raised. Then once you're 0 to 1, then people treat you differently. You're in it. I mean, I'm sure for you, there's a point where you kind of cross that line. You've done your first deal, and then just things start to happen typically much faster.
Yeah. Capital raising was actually harder than I thought it was going to be. For some reason, I don't know why, but I thought it was going to be the easiest part of doing deals. It's definitely not. No. And also one thing that kind of jumped out to me when I did my first one is even people that I know have money, like I have family members who built businesses, sold businesses, you still have to catch them at a time when that money is not invested elsewhere. If they're like this one family member I had in mind, he had actually invested in another syndication and put a lot of money into this. It was a development in Arizona. And I just didn't catch him at the right time for this one deal I was doing. And so like you have to find the right people and then you have to find them at the right time when they have money to invest. It's that's one thing that kind of jumped out to me when I first started was just how hard it is actually to raise capital. Like it's a difficult thing. And, but once you get it and you get that ball rolling, then it goes a lot easier.
Yeah, it really does. I mean, it's people don't realize everything kind of seems easy until you try it. And then it's like, oh, this is not actually as easy as I thought. I actually have investors. We have Probably about 200 active investors in our group. And I once in a while get people ask me, so what do you do? What do you do? Do you just like sit around and do podcasts and like just kind of go travel all the time? Like, what do you do? I mean, there's a part like to me, like I'm an active investor, even though I teach people about passive investing. I take a lot of trips. I do have some remote, ability to do things, but people just, it feels, and even still, I haven't even raised $40 million. It still feels like just amazing to me when someone sees you on a podcast, hears about you, watches a YouTube video, and they send you that 100K or 500K, whatever it is. It's crazy. I've got 4 investors now that individually have invested over $1 million each. And, one of them was the first time investor of over $1 million. It's like, it's kind of wild. Somebody I've never met that is like, oh yeah, I'm going to trust you with this, and it's very humbling. But, it is kind of like you can't get inside someone's head. So you've got to think about, okay, what are the things they could be looking for? What are the things that are going on here? If I follow up with and being the sales experience for me, I didn't know if I would do capital raising or if I'd be somebody who finds and operates, but after a time, it's like, well, I've been doing 10 years of sales. Like, obviously this is a pretty obvious thing because it really is a sales type of role, but to do sales in a way that doesn't feel salesy, to do it in a way that really builds long-term value for people, because nobody wants to be sold, but everybody wants to be a buyer. Everybody wants to buy. So if we can set people up in a way that you're just educating. And this is a quick tip on anybody who wants to raise capital. You and I were doing the, putting content out there, and then people are drawn to us. They're drawn to our group. And there's 2 types of salespeople. There's the hunter and there's the farmer. Right. So the hunter is like an attack dog, right? We're going to go out and we're going to get the sale. We're going to, our goal is to get our money out of their pocket without going to jail. Like that's what some people think, literally, that are these sales dog kind of people. But again, nobody likes that's like the most, like, people don't want that, right? So there's another way of doing it is called farming, right? So a farmer, what they do is they tend the soil, they tend the plants. Like if I have an orchard and I've got apples, I don't go and here's an apple and I just yank on it and try to pull it down or whatever. I give it a little tug. And if it comes off, okay, it was ready. The fruit was ready to be harvested. If not, I just gonna leave it there, and I keep watering. I keep doing things I'm doing, and so that it just happens. People are ready. They've got money. They got things come up. They reach out, and so if I'm continually adding value, I'm continually farming. It's a really great way through this thought leadership platform idea where you're creating stuff and content, and even podcasts and YouTube and even meetups. You're doing these things out there. Then it will come back at the right time. The fruit will be ready, and people will say, "Yeah, I'm ready to work with you."
Yep, absolutely. So I mean, multifamily is one thing that you do, but it sounds like you are in a number of different types of investments. You mentioned before we got on the podcast, you are the 4th largest owner of ATM machines in the nation.
So we partner with the 4th largest operator. So I'm not an ATM operator myself, but we have a partner that has over 25,000 ATM machines, and they've been operating for years. And they're well known in the industry, and we love working with them. It's been the most consistent cash flowing deal that I've seen. And yes, people do still use ATMs. It's shocking that 10% of the US population does not even have a bank account. I mean, think about that. Like over 30 million people living in the US don't have a bank account. Well, why is that? Because banks are great for people that have money. If you don't have a lot of money, you're paycheck to paycheck, you're working for cash, you're doing things under the table, you're an immigrant, it's harder. I mean, so people would rather pay ATM fees than to pay the costs of bank fees. So, but again, it's been a really solid deal for us. We've loved working with this operator.
Yeah, that's interesting. I've always been curious about those type of businesses. I mean, a lot of people, vending machines, ATM machines. In general, do you just buy the ATM and then you find somebody that you are, that needs it on their property, gas stations, convenience stores?
Yeah, it's a really compelling opportunity that I never thought I'd be. We raised over $16 million now for ATMs, and it's become my favorite cash flow investment. It's amazing just what this group has created and what's the economies of scale can do. So they typically grow through acquisitions. They'll buy smaller operators that have 1,000 to 5,000 units, or several thousand units. And then what investors invest in is the new ATMs that go into these locations. So about 98% of these are existing locations where there's a ton of data around, hey, there's 1,000 transactions in this location per month, or there's 2,000 transactions. So they'll know exactly kind of what this is going to create. And the new ATM is simply a method to extend the contract for another 5 to 7 years. So if you own a hotel or you own a convenience store, I'll say, hey, how's it going with the ATM? They'll be happy because they're getting 30% or whatever the percentage split is of what they're getting just for having it in there. I say, how will we get you a brand new ATM? Well, that sounds great. Well, we just need to sign a new contract, and we'll basically get you this brand new state of there. So it's all around the contracts, right? So again, we're working with known locations, with data around how many people are using it. We come in with a new ATM machine, particularly when they get close to being out of contract or it's an acquisition, and then they'll be super excited, extends the contract for another 7 years, and then that location is secure. So it's a really cool model this group has used to be able to grow.
Huh. Yeah. So it sounds like the location owner, they get a cut of gross revenue from the ATM.
Yeah, they just by having it in there. Yeah, because again, if you're at a convenience store and you could say, "Oh, I'm cash only," or people come in and if again, ATMs, it only takes like 30 seconds to use an ATM to a minute, but it doesn't take very long. So you think like, "Oh, nobody's using these ATMs, whatever." But if you just sit and watch one of these ATMs, you'd be amazed. People just one after another in certain locations. Now there are locations that are better than others. So obviously, those locations that are more attractive are far better. But there's a lot of data around with traffic and people coming in, and obviously certain locations they'll know, hey, if it's a convenience store or if it's whatever it is, we want to be in certain types of locations. Maybe a apartment complex, maybe not, right? Because whatever the size, it's just maybe not as many people would be using it. But if it's a lower income kind of, maybe it would be. Maybe a lot of people are paying in cash and they pull money out and move money that way as well.
Yeah, no, that's interesting. Also, you mentioned senior housing development. I know, senior housing is a really big hot topic these days just because everybody's talking about the silver tsunami and how there's going to be such a greater need for senior housing. So how did you get into that? Do you underwrite the deals? Are you part of the underwriting process, or are you just on the capital raising side?
Yeah, so I'm a part of of deals that we do, whether it's multifamily or senior housing. I do my own underwriting and really evaluate a deal. I invest my own capital. I'm involved in the process to make sure that I'm really working to be a part of the management team. If I'm a co-GP, some of the stuff we've done has been more fund to funds, where like the ATMs, I'm not operating ATMs, right? But on the real estate side, we're typically on the operations side, so we're part of that. So yeah, it's a little newer for us to do development. They say never. I said, I would never do development, whatever. I'm like, well, it's actually a pretty good time to for certain products and being in the trend and the market some of these are in. I'm pretty excited about working with them. So it really depends on the story and the team you're working with and things like that. But I found with senior housing, again, there's just a lot of data around it, right? Like if you're buying in a certain market, which we're buying in markets where we see population growth, we see a shortage of senior housing, particularly markets that are a little lower cost. So we're not buying and building in Miami, Florida, which I'm sure there's opportunity there, but in a more a less expensive market where younger families are moving there, it makes more sense because people will say, hey, well, my parents are getting old, they need assisted living or independent living. Well, why don't we just have them move here? It's actually cheaper than for them living in Miami or Chicago or New York, or wherever they are, and just bring them and have them live in that area. So those are kind of the trends that we like. And like you mentioned, the silver tsunami, it's over the next 5 to 10 years, it's just the amount of growth and aging. I think the boomers are the largest generation we've had. And so, we are living longer, but the fact that we are living longer actually means it's better for senior housing because people, instead of dying at, 75, 80, we might be living to 90 or 100, a lot of people, and so being able to have places for people to, a lot of people want to live at home or they want to live at a place that feels like home. And some of my medical background, I worked with a lot of seniors as well. So just seeing how, you kind of get to, you don't expect, but all of a sudden, hey, I can't function myself around the house. I could use some help getting around or preparing meals or in the shower or, just things that you don't think about. But, as you get older, these things become more challenging.
And is this assisted living type of senior housing, or is it just basically a 50 plus community?
Yeah, so there's different elements. Yeah, there's kind of communities that are senior communities. That's kind of one end. The other end would be like a nursing home, right? So nursing home is more like skilled nursing care, like around the clock. And then between those two, you have independent living. So it's similar to the 55 and over, but it's independent living typically attached to an assisted living. So assisted living, get really nerdy with the senior stuff here, but assisted living is more like maybe they need some additional help, some additional care. So of some of the stuff we'll do, it'll be a mix of independent living and and assisted living, right? So that there are resources. But if somebody needs a really high level of care, if they had a fall and they're out of the hospital, maybe they would go to a nursing home before they come back to assisted living or their independent living. So, but it is typically these centers are very nice. They're typically higher end places. They have lots of amenities. They have lots of social stuff. So it's a very attractive place for individuals that have planned well financially and financially can afford to be there. So
they are expensive. My family members in one right now, and I think it's $11,000 a month for rent, which is just crazy to me. But
is it in Washington, or where is it located?
No, it's in California.
Yeah, of course, it's somewhere in California. But yeah, it's kind of shocking when you see how much people are paying. It's just expensive. I mean, any way you slice it. I mean, some people can have people, a caregiver live with them at their house, but then some people can't always afford to do that, or there's just a lot of things. But yeah, it can be to have the right kind of care. It can be very expensive.
Yeah. So what specifically for the developments that you're involved in, are they it's assisted living that you guys are building?
So we've done a mix, some stuff that's a mix of assisted living and independent living. And so, kind of the group that we're working with that I'm a partner on for some projects, it's been, they've done stuff different parts of the country, really where the demographic makes the most sense. And so I find that's just a great rule when it comes to, I talk about this in my book. I talk about, really defining the market first, right? So whether it's the ATM machine market, it's the senior housing market, it's the multifamily market, buy in an area that's a great area that's growing, population's growing, or the demand is growing. You have favorable legal things. That's why, I don't really own anything in California, right? I own some multifamilies in the Southeast because, you can not have somebody not as expressed desire, hey, I'm not going to pay you, and it can take you 6 months to get them out of there or more, and a lot of money. So it is kind of it's good to be in markets and areas where you see growth. So in senior housing, we try to buy in those areas.
Yeah, makes sense. datausa.io. It's my favorite website to just get a quick glance at a metro. I just if it's not doesn't have positive in both the population growth and the job growth, then it's a pass for me. So it's a really quick website. If you guys out there are looking at different metros, just pull it up, look at those metrics, and see if it's good for you.
Nice.
So multifamily is your bread and butter. That is what you do. You guys have. I was looking at your website. You've done probably, it looked like 6 or 8 different multifamily apartment sites. What does the future look like for you? And what's the future? What's the next 3 to 5 years look like for you?
Yeah, it's my crystal ball is broken, so I'm not exactly sure what it's going to look like. I try to, what we've really tried to focus on. Again, I've had over 1,600 one-on-one phone calls with high net worth investors, and just learned a lot from the conversations, right? And realized that for a lot of people, it's a lot of people are looking for cash flow. And I think that's one of the challenges with real estate in general right now, is there's not a lot of stuff that cash flows quickly or really cash flows much. So it's a challenge. And there are deals that have been, maybe a few years ago. And I've just, for my book, I really talk about this, that I think cash flow is superior to like long-term appreciation, because it allows you to fire yourself. It allows you to quit your job. It allows you to cover expenses through cash flow. And there was a time, there's a time where you could do anything in multifamily, like 2010 to 2020. And it was kind of like, you were a genius because you owned it, right? And now it's like, it's getting a lot more challenging. I do think it is a good time for multifamily now. We also look at these alternatives because we're finding things in the business world or other things, private equity, that does cash flow almost from day one or very quickly. And so I found, again, this is applicable for anybody who's a passive investor. It's not just what asset are you invested in. I don't love real estate. I love what real estate does for me, right? I love that it provides depreciation. It provides at times cash flow. It provides other things. There's other things that provide. Well, I'm looking for cash flow. If I'm looking to actually get out of a job, I need to learn how to develop cash flow in my investing. And so that's why we found some of these other things. So we're going to tend, we still love multifamily. We're still looking at, other things in the space. I think it is actually coming in around to be a good time. And it will be interesting to see if rates do in fact drop within the next 12 months. What will that do to pricing? It could continue to put upward pressure on pricing for multifamily. So, but yeah, we're continuing to look at it, just basically all different assets that make sense, that we feel like we understand, that are not some just black box that we are really not, are kind of hard to understand. We want to make it very easy to understand. So, but yeah, looking for opportunity for growth and depreciation and cash flow.
Cool, man. Do you guys look at other assets or just multifamily, industrial, self-storage, etc.?
Yeah, I mean, I've invested, I'm a passive investor as well. So I've invested in some other stuff, some self-storage, some other real estate assets. And we'll look at a lot of different things. We just try to find something that, again, I am of the opinion that if you're an investor, there are times that it makes sense that what the market is offering you is a great opportunity in a certain asset class. And there are times where that may not be the case, where it's over here, I've got another asset class that makes a lot more sense for me. Whether that's within real estate, like you said, from self-storage or industrial. And I love those areas. Those are great. And we haven't brought, any of those deals to investors yet. We probably will in the future. And then also looking at these other alternatives as well. So we're kind of open to say who do we, and then a lot of it just goes with a partner. Who's a partner that I've worked with before, or someone that I just really feel like I could trust that we're going to have a great experience. Because again, I think the market is the first thing. Just, okay, what is the specific market? What's happening? The second thing is really the operating group of the partners. And then finally, it's the deal, right? So the deal is kind of the third thing in that for me. It's more like, well, what is the actual overall market for this? And just like you were talking about looking at data, then who is the group? Like, do I know them well enough? I mean, you want to, you don't really know somebody, in my opinion, until you do a deal with them. You get to see how they respond through things, and you get to find out about that experience. So
cool. All right. Well, I just took a peek at the clock. It looks like we have run it down. It is time to jump into the quick question round. Are you ready?
I'm ready.
Let's do it. It starts with books, or really just any form of education. Could be a book, could be a Netflix show, YouTube channel, whatever. Just give me 2 recommendations, one for general life wisdom and then one for real estate.
Okay, so my 2 favorite book recommends, I read a lot. My favorite book of all time is a book called The Gifts of Imperfection by Brené Brown. And it basically is an idea of kind of owning your story, overcoming shame, just really getting to a life where you are a wholehearted person, where you're not, a lot of people are unbalanced, where they're just trying to, prove something to themselves or to the world. And so it's just a great personal development book called The Gifts of Imperfection. The second one is called Never Split the Difference. It's by Chris Voss, a former FBI negotiator, hostage negotiator. And it's phenomenal. It's a book I try to read every year, and it just talks about just kind of negotiating in daily life and really creating win-win for people. It's not like, oh, okay, I'm going to negotiate so that I can just get everything. And no, you actually kind of create a win-win for people. So those are a couple of my favorites.
That's cool. I listened to Never Split the Difference. I think it was on audiobook. But for some reason, I did not catch that he was an FBI hostage negotiator. That's
well, he's got a lot of stories in there about it. I actually had to have lunch with him. Let's see, it was last year, and he's got these techniques in there about mirroring and how do you want me to do this and all. I mean, there's just so many things in there that are just really valuable. So love it.
I'm thinking of a different book. Sounds good.
Okay.
All right. Next question is for your younger self. Let's go back to the Bronson who was just getting started not too long ago, back in 2018. Go to him, look him in the eye, give him one piece of advice moving forward.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com. So if you are interested, head on over there. With that said, let's get back to the podcast.
I just say don't be afraid to go after the biggest things you can possibly imagine, and don't be afraid to just do what nobody else is doing, and just swing for the fences, because if what's the worst that could happen? You don't make it, you get halfway there. So I think that's something that I would tell them.
That's good advice. Something my dad told me a while ago, and it stuck with me, was just, I can't remember what I was saying. I was like nervous about failing at something, and it was money related. And he just told me, you can always make more money. And it just stuck with me. I'm like, that's true.
That's true.
Just,
you can always make
go
it
for it. And
good reminder.
If it doesn't work out, you can make more money.
Yeah.
All right, next question is about the U.S. It's a big place. A lot of opportunity out there, and there also are a lot of metros to choose from. So, what is the metro that you're most excited about investing in today?
It's a good question. I still like the Southeast. I like the South. I mean, everyone from Texas, the Sun Belt, I still like. There's been certain areas that have been hit a little bit. I know Arizona has been hit a little bit. I like Alabama, Arkansas a lot. And I think it really depends. It depends on the deal. It depends, Warren Buffett says price is what you pay and value is what you get, right? So really, so I think it would take a specific deal and some metrics around it. Okay, what do we actually see happening here? Has growth slowed down? Have things changed? I do think, though, being in areas that are landlord and business friendly, particularly these days, there's so many people moving from where I live in California to all these other states that are much more conducive. So I think that, areas where they're encouraging growth, I think those are great areas to be in.
All right, I'm going to push you a little bit here. In one city, just give me one city name.
Fayetteville, Arkansas.
Fayetteville. Interesting. You're the first person to say that. That's
No.
I have not looked into Fayetteville. Why that specific one?
It's right. It's Bentonville, Fayetteville. It's the Walmart headquarters. It's growing. It's booming. And again, it's kind of what I was saying earlier, just lower cost of living. Lots of families, lots of people moving there, and I think it's it is a pretty landlord business friendly area. And I just think an area like that is going to do very well over the next 5-10 years.
All right, sounds good. All right, next question is about finding the deal. It all starts with getting in contact with the seller and writing up that purchase agreement. So what is your favorite way to generate leads and find good deals?
So honestly, what we do, when I look at leads, it's interesting. I look at it differently than a lot of folks where, I'm not the one actually usually finding deals per se. So I'm not the one who's out kind of knocking doors and working with brokers. For me, leads are more finding investors, right? So that's more kind of what I look for. And so my goal this year is 10,000 new leads as far as potential investors. And so how we look for those is we just, try to keep creating more and more content. We're actually looking at creating a capital raiser guide and doing a masterclass and some coaching around that potentially to actually bring more people in, because we found there's a lot of people that are interested and are capital raisers that also invest passively as well. We used to think it was pretty cut and dry, but there's a lot. I'd say people that capital raise, 30-40% of them end up being investors in different things passively at times. So it depends. But so I don't know if that really answers your question, but some of the different farming methods that we use, as I mentioned before.
So again, I'm going to push you on this one. So what's your single favorite way to, generate leads? It could be any type of lead, but you're specifically talking about investors. So what's your favorite way to find new investors?
I think writing the book was super helpful. Writing the book, I get people that have read my book and you're like, oh, I read your book, and I set up a call, and it's like I'm getting now, I don't know, 5-6 of these a week and it just came out recently. So it's like, that's great, right? To have these people that are in a way pre-sold on, what the strategy is, what my methodology is, why we invest in certain things. And so you think about people know there's so much information and noise out there, but for someone to actually take time and read a book, but there are people that love reading books, and then it makes you, the word authority has the word author in it. So once you write a book on something, so maybe Gabe, do you get a book out? Maybe you need to write a book here coming up.
Yeah, maybe one of these days. Funny. Authority has the word author in it. I like that.
It does. Yeah.
All right. Next question is about lesson learned. Not every deal goes the way we expect it. Sometimes a wrench is thrown into the mix and the deal goes a little bit sideways, but that is where we get our biggest lessons. And that's what we can take on to the next deal. So what was a deal that went a little bit sideways for you, and what was the lesson you pulled from it?
Well, there's been a couple deals we've had with bridge debt, and some of the ones with bridge debt, you're doing value add stuff. And if you have any operational issues or challenges, there's been some serious challenges where you've had to say, hey, we need more capital, or we've got to figure out how to make this work. So I'm pretty open with that with investors, because I think that there's some lessons of learning. I have the mentor that I mentioned in the beginning of the interview was my cousin, who has 25 years or 30 years of experience, has only done, fixed long-term debt at, typically lower leverage. He's never had issues with stuff that valuations are down and we've got to figure this out, whatever. And the challenge is if you had areas like Atlanta, where there's submarkets that have gone down over 40% in the last couple of years from where things were bought at, because of the valuations, it's terrible. So if you put 20% down and you need a bunch of value, you're still negative equity, right? So there's things there that you can, no one expected such a rise in interest rates so quickly, right? So that's been a lesson I think that's happened, and it's painful. You see, when you do a capital call or you have a risk of, hey, this, we're not exactly sure how this is going to turn out or what's going to happen in this deal. It's a tough thing because you see people they've trusted you with their capital, and anybody who's raising capital or doing deals. Something to think about. So my big lesson or aha from that was just, having sometimes lower projections, particularly in multifamily, being willing to do longer term fixed debt that's less conservative, maybe lower loan to value, and just just kind of make just being safer with the debt side of it.
Yeah, you can really get caught with your pants down there if you get the wrong debt structure, especially with the carrying costs. If you're doing flips, that can really bite you.
Sure.
All right, next question, or actually, we're on to the last one. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. Where can they find you? And then what can they expect when they reach out?
Okay, yeah. So the best way to reach out is at bronsonequity.com. That's our site. We have some giveaways there. The first couple chapters of my book, if you want to check that out. Fire Yourself is also available on Amazon or anywhere you get your books. And we had some on Audible as well. And then, if you want to reach out, we have our kind of weekly, monthly stuff we're doing for education in the space. And then we do have just some really unique investment opportunities that some we've been the only group that's offered them. So we could say, and some of them they're completely exclusive. And so I always love, as a passive investor, it's great to be on a number of people's lists and really find people that your values align with. So, but no, I really appreciate you having me today, man. It's been a lot of fun.
Cool. Yeah, absolutely. So I will put that link in the show notes. So if you guys want to reach out, just click that little more in the description. It'll pull down the full description. In there, you can find the link, but it's pretty easy. BronsonEquity.com. Cool, man. That wraps it up. Thank you very much for hopping on the show.
Awesome. Thanks so much. Thanks for having me.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe of the realestateinvestingclub.com. If you want to support the show, just give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.